Welcome back, everybody, to another deep dive.
Mm,
Today, we're going to be taking a look at AMD,
right.
specifically selling put options on AMD. And looks like we're focusing on December 2024 expirations,
hmm
which is interesting.
Yeah, December 2024. That's a good ways out.
It is. So,
Yeah.
you've clearly been doing your research on this. You've got some data and analysis here for us. So let's jump into it. Why might this be an attractive opportunity, but also, what are some of the risks that we should be aware of before we even think about, pulling the trigger on a trade like this?
Yeah. So what really stands out to me right off the bat is just the overall context for AMD right now. We're looking at a stock price that's below its 20-day moving average.
Okay, so explain that to me a little bit.
Yeah. So the 20-day moving average, it's just a line that shows the average closing price over the past 20 days. And traders use it a lot to identify trends and, get a sense of the momentum.
So being below that's not great.
Exactly. It suggests that there's been a recent downward trend. So not exactly a raging bull market.
Yeah, it feels good. That doesn't sound super bullish. But I'm also looking at some other data here, and I'm seeing the RSI, right, the
Yeah.
Relative Strength Index, is coming in at 28.01.
Okay, now that's interesting.
So how do we interpret that?
Well, an RSI below 30 is generally considered to be oversold territory. So this could signal that the stock has been kind of pushed down too far too fast, and we might see a bounce back.
Right.
It's a classic case of how those technical indicators can sometimes give you these little clues.
Right, they paint a slightly different picture. So we've got this downward trend, but it might be oversold. So that's kind of an interesting push and pull there.
Yeah.
But we can't forget the bigger picture here, right? AMD is a major player in the semiconductor space,
Yeah.
which has its own dynamics and its own trends going on right now,
Yeah.
especially with all the buzz around AI.
Absolutely. AI is the hot topic right now, and it's
Mm.
definitely having a huge impact on the semiconductor sector.
Right? How does that play into AMD's position in the market?
Yeah. Well, AMD is a powerhouse when it comes to desktop processors, right? They've got a really strong position there. But the AI chip market, that's really where the action is. And that's where they face some pretty fierce competition, especially from a company like NVIDIA.
I was going to say, you can't talk about AI chips without mentioning NVIDIA. So, where does that leave AMD?
Yeah.
Then, we've got this kind of mixed bag of signals right now.
Well, that's what makes this so fascinating. You've got AMD kind of caught between these larger market trends.
Right.
And understanding this context, I think, is absolutely crucial because it's going to influence how AMD's stock performs. And that directly impacts the potential of selling puts on the stock.
Right. Because ultimately, options are derivatives. They derive their value from the underlying asset.
Exactly.
So we got to understand what's going on with AMD, the company, with AMD, the stock, before we can even start talking about, specific options trades.
I completely agree.
Okay, so let's get into the specifics of those puts then. You've highlighted the December 2024 expirations, specifically the 127 strike and the 126 strike. So why those? Why December 2024?
Well, first of all, let's talk about those potential returns, because that's what really catches the eye, right? We're looking at a possible annualized return of over 109% for the 127 strike.
Whoa.
And 85% for the 126 strike. So, that kind of return, you could potentially double your investment in a year.
Right, which is amazing.
Yeah.
But I know there's no free lunch here.
Right.
So what's the other side of that story? What are we giving up for that potential return?
Well, the thing to remember about selling puts is that you're essentially making a promise. You're promising to buy shares of AMD at that strike price if the stock falls below that level by the expiration date.
Okay, so I'm selling someone the right to put those shares to me
Exactly.
at that price.
Right.
So if AMD plummets, I'm stuck buying these shares at a price that might be way higher than the market value.
Yeah, that's the risk you're taking as a put seller.
That makes sense. So how do we, assess whether that's a good risk to take or not? I mean, how do we think about those probabilities? What are the chances that AMD actually drops that much?
Well, that's where we look at something called the ITM probability, or the in-the-money probability.
Okay.
And in this case, the data is showing that the ITM probability for the 127 strike is about 43.82%.
Okay.
And for the 126 strike, it's about 35.14%.
So roughly like a 1 in 3 chance, 1 in 2 chance that it could actually fall below those levels.
Right. So it's definitely not a negligible risk.
No, I was going to say those don't seem astronomically high, but like the thought of AMD dropping, that much still makes me a little nervous.
Yeah. And it's important to remember that even though those probabilities might seem relatively low, there's still a chance, right? There's still a chance that AMD's price could drop below your chosen strike, and you could end up having to buy those shares.
Right. And I guess the other thing, too, is that, those probabilities are based on, current market conditions
Mm.
and historical volatility.
Yeah.
But things can change, right?
Oh, absolutely. Things can change very quickly in the market.
So no setting it and forgetting it with options.
Definitely not. This is an active strategy. You
Yeah.
need to be monitoring your positions and staying informed.
Okay, so it's not just about where the price is today, but where it ends up, in December 2024.
Right. That's the key.
But before we get too deep into, those future scenarios, I want to make sure we understand, the nuts and bolts of how these options work and how those probabilities are actually calculated.
Yeah, absolutely. Because there's a lot more to it than just those simple probabilities.
Right. And that's where I think those mysterious Greeks come into play, right? Delta,
Yeah.
gamma, theta, all those fun things.
Oh, yeah, the Greeks. They sound intimidating, but they're actually really helpful once you understand what they mean.
Okay. So for our listener who maybe hasn't taken a deep dive into options lingo before, can we break down what those Greeks are all about?
Sure. Think of the Greeks as kind of a way to measure how sensitive an options price is to different factors. So, for example, delta tells us how much the option price is expected to change for every dollar that the underlying stock moves.
Okay, so delta is all about price sensitivity.
Exactly. And in
Okay.
this case, the 127 strike has a delta of about 0.58, while the 126 strike has a delta of about 0.66.
So higher delta means the option price is going to react more dramatically to swings in AMD stock price.
That's exactly right.
Okay, so that's delta. Now what about gamma? What is gamma all about?
So gamma tells us how quickly that delta itself is going to change. Because delta isn't static, it can move around.
Oh, that's interesting.
Yeah,
Okay.
and in our cases here, the gammas are relatively low, about 0.09 and 0.08.
So what does that tell us?
Well, it suggests that even if AMD's stock price jumps around a lot, that delta and thus the option price won't go completely haywire.
Oh, so it's kind of like a measure of stability then.
Yeah, you could think of it that way. A lower gamma generally means a more stable option price, even if the underlying stock is volatile.
Okay. So gamma is like the delta of delta.
You got it. It's measuring the rate of change of the rate of change.
All right, now I think I get it.
Sounds a bit like calculus class, doesn't it?
It does. Yeah, flashbacks to high school.
But for our purposes, just remember that lower gamma generally means a more stable option price.
Okay, got it. Now let's talk about theta. This is the one I hear option sellers get really excited about.
Yeah, theta's all about time decay.
Time decay.
Fair.
All right, break that down for me.
So theta measures how much the option's value is expected to erode each day as we get closer and closer to the expiration date.
Oh, interesting.
And for put sellers, a high negative theta is a good thing.
Why is that?
Well, because it means that time is literally working in your favor. It's eroding the value of that option, and you get to keep a portion of that decay as profit.
Oh, so time is money.
Exactly. Time is money, especially when you're selling options.
So can you give me like a concrete example of how this works in practice?
Yeah, sure. So let's say we choose the 127 strike with its theta of negative 105.26.
Okay, big theta.
Yeah. And let's assume, for simplicity's sake, that all other factors remain constant. So with that theta, we can expect the value of that put option to decrease by roughly $105 each week,
Just from time.
just from the passage of time.
Wow, okay.
So if AMD's price stays relatively stable, we get to keep a portion of that decay as profit.
So the clock is ticking in our favor.
Exactly. And that's why understanding theta is so important for put sellers. It can be a very powerful force working to your advantage.
But of course, we can't rely on theta alone.
Oh, definitely not.
Right. There's so many other factors at play here.
There's a lot to consider. We've got AMD's performance.
Yeah.
Is the stock going to go up? Is it going to go down? We've got overall market volatility. How choppy are things going to be?
And all those external factors, right?
Oh, yeah, absolutely.
Yeah.
All the things that could come into play that we might not even be thinking about right now.
Right? Like, who knows what's going to happen between now and December 2024.
Exactly. It's a long time horizon.
So we'll delve into all of those risk assessments in part 2 of our deep dive.
Sounds good. Let's get into it.
But for now, we'll leave it there. Thanks for joining us for part 1.
Thanks, everybody. Welcome back. All right, so we spent part 1 kind of laying the groundwork, talking about AMD, the overall market context, and the basics of put selling. So now let's get into the, how do we actually approach these opportunities?
Yeah, let's get into the nitty gritty. What are some things that our listeners should be thinking about before they, make any decisions about selling these puts on AMD?
Well, I think before you even think about strike prices or expiration dates, you need to take a step back and think about, your own goals and your own risk tolerance.
Right.
What are you hoping to achieve with this trade? Are you aiming for those aggressive short-term gains, or are you more comfortable with a, slower, steadier approach?
Right, because those are going to lead to very different strategies.
Exactly. If you're someone who's, really risk averse, you're probably not going to be selling puts on a stock like AMD that has, quite a bit of volatility.
Right. But if you're, comfortable with a little bit more risk and you believe in AMD long term, then this could be a really interesting strategy.
Exactly. So once you have a clear understanding of your objectives and how much risk you're willing to stomach, then you can start thinking about the specifics of the trade.
Okay. So let's say our listener has done that soul searching and they're ready to choose a strike price.
Right.
We've highlighted the 127 and the 126 strikes here. Why those two?
Well, it all comes down to this balance between risk and reward.
Right.
So the 127 strike offers a higher potential return, but it also comes with a higher probability of being assigned those shares if AMD's price takes a dip.
Right. So higher reward, higher risk.
Classic trade-off.
Classic trade-off.
Yeah.
But couldn't you say that those attractive premiums help to offset some of that risk?
Absolutely. The premium that you receive upfront acts as a cushion. So if AMD's price drops a bit, you've already earned some income to offset those potential losses.
Right.
But you have to remember that cushion has limits. If AMD tanks significantly, that premium won't be enough to cover the difference between the strike price and the market value.
Got it. So it's not just about maximizing that premium, but finding a balance between that potential reward and the level of risk that you're comfortable with.
Exactly. Now, on the flip side, the 126 strike offers a bit more safety. The premium is lower, but so is the probability of assignment.
Right. So if someone is a little more risk averse, that 126 strike might be the better choice, even though the potential reward is slightly lower.
Yeah, it's all about finding that sweet spot that aligns with your individual risk appetite.
Okay, so we've talked about the strike price, but we also need to think about the expiration date, right?
Yeah.
We've been focusing on these December 2024 expirations.
Right, and there's a reason for that.
What's the reason?
Well, first of all, the longer time horizon allows for more of that theta decay that we talked about in part one.
Oh, right. Time is money.
Exactly. So if things go well, that theta decay can really boost your profits.
Okay.
Plus, it gives AMD a little bit more breathing room. We're not betting on a sudden dramatic price surge here, just a steady climb or even sideways movement.
So patience is a virtue.
Absolutely.
Okay. So let's imagine our listener has chosen their strike. They've defined their risk. They've sold their puts on AMD. What happens next? Do they just sit back, relax, watch those premiums roll in?
Well, I wish it were that easy.
Right.
Unfortunately, options trading is not a passive activity. Active monitoring is absolutely essential.
What does that look like in practice?
Well, you need to be keeping a close eye on AMD's price movements.
Okay.
Any news or announcements that could impact the stock, and of course, those broader market trends that we talked about earlier.
So we're talking, checking stock charts, regularly
Yeah.
reading financial news, making sure we're staying informed.
Exactly. You want to be aware of any developments that could significantly impact AMD's price.
So it's not just set it and forget it.
Yeah.
We need to be paying attention.
You got to stay engaged.
What if things start to go against us? What if AMD's price, starts heading south and we're getting nervous?
Well, you always have the option to buy back the put options that you sold to close out the position.
Okay, so basically cutting our losses before they potentially get bigger.
Exactly. Sometimes taking a small loss is the best way to protect yourself from a much larger one down the road.
Makes sense. What if things are going well, though? What if AMD's price is trending upwards?
Well, in that case, you might consider rolling your position out to a later expiration date.
Okay, so rolling, what does that mean?
Rolling basically means you're closing out your current position and simultaneously opening a new one with a later expiration date.
So we're basically saying things are going well. Let's keep this party going.
Exactly. You're extending the trade to continue benefiting from theta decay and potentially collect even more premium.
So rolling is kind of a way to, ride that wave of momentum.
Exactly.
Okay. But it sounds like there's some downsides to rolling too, right? We're tying up our capital for even longer.
That's a good point. Rolling does tie up your capital for a longer period. And there's always the risk that AMD's price could reverse course and you end up worse off than if you had closed out the position earlier.
Right. So it's a judgment call.
It is.
Okay. So we've talked about active monitoring. We've talked about potential adjustments. But what about those unexpected events?
Yeah.
The black swan events that can really throw a wrench in everything. How do we plan for those?
Well, even with the best analysis and planning, there's always the possibility of the unforeseen.
Of course.
So that's why it's crucial to have a plan in place for those what-if scenarios.
So basically thinking through those worst-case scenarios.
Exactly. Before you enter the trade.
What would that look like?
Well, first of all, define your maximum loss threshold. How much are you willing to lose on this trade before you exit, regardless of your initial plan?
Right. So having those boundaries in place can help you avoid making those emotional decisions in the heat of the moment.
Exactly, because when you're in a losing trade, it's easy to get caught up in the fear or the hope that things will turn around.
Right. And sometimes the best thing to do is just cut your losses and move on.
Absolutely. So having that predetermined plan can really help to keep you grounded.
So I think what I'm hearing is that we're advocating for a balanced approach here. We're
Mhm.
not chasing those, sky-high returns blindly,
Right.
but we're also not letting fear of the unknown paralyze us.
You got it. Put selling can be a powerful strategy for generating income, but it's not a get-rich-quick scheme.
Right.
It takes careful planning, diligent monitoring, and a healthy dose of risk management.
Okay. So it's not just about, the numbers, but about understanding the why behind AMD stock movements.
Exactly. You need to connect those dots, the financial data, the news, the broader trends to get a clearer picture of what's happening and what might happen next.
So it's about understanding the narrative, the story that's driving those
I
numbers.
like that. The
Yeah.
story behind the numbers. Because the numbers tell you what's happened, but understanding the why helps you anticipate what might happen next. And that's where the real edge lies.
It's almost like connecting the dots to see the bigger picture, which then allows you to anticipate the next dot before it even appears.
That's a great analogy.
Yeah.
It's about recognizing patterns, understanding the forces at play,
Mhm.
and using that knowledge to make informed decisions.
But we're not done yet.
No, we're not.
We've got a whole other part to this deep dive.
That's
We're
right.
going to explore some alternative scenarios,
Yeah.
talk about diversification.
More food for thought.
Yeah, and hopefully leave you with some, final takeaways to kind of guide you on your options trading journey.
Looking forward to it.
All right, so join us for part 3 as we wrap up our AMD adventure.
See you there.
Welcome back to the final part of our deep dive into selling puts on AMD. We've talked about the potential rewards and risks of this strategy, but I think it's important to also consider some alternative scenarios. What if things don't go exactly as planned?
Yeah, I mean, we can't just assume that AMD is going to rebound right away. The market's unpredictable, and things could definitely go the other way.
So what are some other option strategies that our listener could consider if they're feeling a bit more bearish on AMD's prospects? What if they think the stock might actually continue to decline?
Well, if you're anticipating a further drop in AMD's price, then selling puts might not be the best approach. You could actually consider buying put options instead.
Okay, so that's kind of the opposite of what we've been talking about, right?
Exactly. Instead of selling the option, you're buying it. And this gives you the right to sell AMD shares at a certain price.
So you're essentially betting that the stock price is going to go down.
Right. And if it does, you can either exercise the option and sell your shares at that higher price, or you can sell the option itself for a profit.
Got it. So buying puts allows you to profit from a decline in the stock price. But what about the risks? What are we risking when we buy puts?
Well, the main risk is that AMD's price doesn't go down or even goes up.
And then what happens?
Well, in that case, the put option would expire worthless and you would lose the premium that you paid to buy it.
So your maximum loss is limited to the premium.
Exactly. That's one of the advantages of buying options.
Okay, so buying puts is one alternative. What are some other strategies that our listener could explore if they're not keen on either selling or buying puts?
Well, there's a whole world of option strategies out there. Covered calls, protective puts, spreads, straddles, the list goes on and on.
Right. It's like a whole different language.
It kind of is.
So is there one strategy that's better than all the others?
Not really. It depends on your individual goals and risk tolerance and your outlook on the market. There's no one-size-fits-all approach to options trading.
Right. It's about finding the right tool for the job.
Exactly.
Now, this deep dive has been very focused on AMD, but we can't forget the importance of diversification, right?
Absolutely. Diversification is key to managing risk in any investment portfolio, and options are no exception.
So what are some practical ways that our listener can diversify their options portfolio?
Well, first of all, you can diversify across different underlying assets.
Okay, so don't put all your eggs in the AMD basket.
Exactly. Even if you're really bullish on AMD long term, it's still a good idea to spread your risk across other stocks or even other asset classes.
So we could sell puts or buy calls on, other tech companies, or maybe even look at some completely different sectors.
Right. You could even explore options on ETFs that track broader market indexes.
So that way, even if one particular trade goes against us, the impact on our overall portfolio is going to be much smaller.
It's like building a safety net.
Right. And what else can we do to diversify?
Well, you can also diversify across different options strategies.
Okay, so maybe we do a little bit of put selling, a little bit of covered call writing, mix it up.
Exactly. That way you're not relying on any one particular strategy, and it can help to smooth out your returns over time.
So we're spreading the risk across different strategies, different assets. Anything else?
Yeah, I think the third key element of diversification is to spread your risk across different time horizons.
Oh, interesting. So we're not just focusing on those December 2024 expirations.
Right. You could incorporate options with shorter or longer expirations into your strategy. That helps to, capture opportunities across different market cycles.
So it's not just about what you invest in, but when you invest.
Exactly. Diversification is about creating a well-rounded portfolio that can weather different market conditions.
So we've covered a lot of ground in this deep dive.
Mhm.
We've talked about the specifics of selling puts on AMD. We've considered some alternative scenarios, and we've emphasized the importance of diversification. Any final thoughts you'd like to leave our listener with?
Well, I think the most important takeaway is that knowledge is power in the world of options trading.
Right. The more we learn, the better equipped we'll be to make those smart decisions.
Exactly. And remember, options trading is not gambling. It's about managing risk-making, calculated decisions and being prepared for different outcomes.
Right. And it's also about being patient and disciplined.
Mm.
Not chasing those quick profits, but focusing on the long game.
I completely agree. Options trading is a marathon, not a sprint.
So keep learning, keep practicing, and never stop exploring the world of options.
Happy trading, everyone.
That's all for this deep dive. Thanks for joining us.